Hello, everybody. Welcome to the Propathon panel discussion. We have with us Sudarshan, Ram, and Dr. Advocate Harshul Savla. Welcome to all three of you. We have the real estate industry's experts in this segment today, which we will be having the conversation. We are going to be deep diving into REITs, fractional ownership, and we're going to be comparing the investment opportunities as compared to the traditional forms of investments in real estate. The Indian real estate is evolving. There's a lot of consolidation happening. We are having a lot of corporatization happening. The landscape is increasing. We have new stakeholders. We have a lot of changes which are happening. And today we will be discussing this with our esteemed panel, Sudarshan, Ram, and Harshul. So first of all, let me give you a warm welcome, all three of you.
Thank you.
Thank you. So we all are aware. I will just create the foundation for all our attendees. Once again, we'd like to thank all of you who have taken time off and were attending at the Propathon 23, which is an effort endeavored by PropertyAngel. We have this 3-day virtual event which is going on, and we are having regular sessions. And during end of the sessions, please do, if you have any questions for Sudarshan, for Ram, and for Dr. Advocate Harshul Savla, or for Sapna, please put it in the comments, and we will look forward to answering that after the session is over. So once again, a warm welcome to all our attendees and delegates for attending this virtual event. So we all are aware that we have now REITs, we have fractional ownership as a very, very structured way of investments. I will start with Sudarshan. Sudarshan, will you like to tell? The fractional ownership is right now just evolving, right? And there are a lot of so-called confusion. There are a lot of doubts in terms of what fractional ownership is all about. So all who are attending and who are watching us today, will you want to give us some idea of what exactly, in a very, very simple language, what is fractional ownership?
Okay, thank you. A more simpler answer is what I'll give, but a detailed answer, people should read Harshul's book. He has already authored a great book, which is on fractional ownership and REITs in general, which will give you a great idea. And it's a fantastic book, which I got the opportunity to read as well. But having said that, fractional ownership is nothing but a simpler format of a REIT. It's more a private REIT structure, which is non-subject to market volatility. In a simpler language, but in a more basic language to put for a layman, it is that, hey, me and Sangeet are two people who want to buy a property. We don't know each other, but we still believe in the investment opportunity, etc. Today, we are not investing because we don't know each other. We don't trust each other. We don't know who's going to manage, who's going to take calls, etc. We come in as a platform, monitor the entire journey for the entire investors, become that trusted partner in terms of decision making, which eventually an investor only takes. And we go and buy a share of a large property or a smaller share of a large property asset. So it's about taking a 50 crore property, subdividing into 25-50 lakh rupee ticket sizes, where investors can get exposure to a grade A investment opportunity with grade A clients, and then they are able to track their rentals and every other thing from that standpoint. What we realize in the entire India investment story is India buys close to about $20-30 billion worth of residential real estate as an investment to generate 1-3% returns per se. These people always aspire to own their own office, aspire to own the hospital which they're getting treated at, aspire to own the hotel which they go to. And, we are creating such an opportunity for them as a platform to do it, to move the residential investment money and not end-use money into commercial real estate, which frankly has far better chances of appreciation vis-a-vis a residential return person.
Fantastic. So you are then focusing on the commercial and the retail asset class. Fantastic. Very quickly, Harshul, you're on mute. Yeah, Harshul, yeah. So my question to you is, since I have asked Sudarshan, and I'm fortunate to have very, very nice, diversified panel here with all three domain experts. So will you already acknowledge that we have a book which I will want to show all of us here? We have this book of Harshul. Will you tell us about REITs now? Sudarshan has given us a very plain layman language from the fractional ownership perspective. Will you tell us what exactly is REITs?
So, here is where I will give you an analogy. You have banks, you have the private banks, public sector banks, which are heavily regulated by the RBI. So there are a lot of norms which are in place. And then you have NBFCs or you have AIFs, right? NBFCs, AIFs serving a particular purpose with relatively lesser regulations. They are not allowed current account, saving account. But on the other side, you have the banks which can take a wider public base money through current account, saving account. So I think a very large short analogy for a REITs and a fractional ownership would be something similar, where REITs you can look at as banks, and fractional ownership you can look at as NBFCs. Now, REITs, if you really want to understand the concept in a very layman perspective, think of it from a mutual fund. How in mutual fund you trust the fund manager, you put the money in that particular fund, and it is invested in stocks. Here, in case of REITs, the investment is in income generating real estate. So, the operational word is income generating real estate. Now, which means one, it has to have an income generating from a license, from a lease, from some format. And second is it needs to be real estate. Now, which is where opens a wide array. So from India perspective, we look at real estate as commercial real estate, which is office space. Possibly we will soon have our first mall REIT or a retail
we
REIT,
already have that, right?
Which is up, right? Now, you also have a possibility of extending this to residential, which is service apartments. You have this possibility of extending it to warehousing, to data centers, to every form of real estate which can be monetized and can give you a regular income. So, the possibility is huge. It is, after almost 65 years of this concept, that in India we are doing these widespread discussions. This has been in existence, tried, tested. It started from US 65 years back. So there is really nothing more new to reinvent. It's a huge market which is sitting over there. We have the framework ready. We have the young minds, the platforms in the form of fractional ownership, which are trying to bridge gap, whatever specific higher yield expectations are there. We also have a listed platform in the form of REITs which are available. So I think investors which were moving out from real estate because they were suddenly finding these financial instruments more attractive. You had ULIPs, you had mutual funds, etc. Now are coming back in real estate thanks to initiatives like REITs and fractional ownership, which is a great move. And as Sudarshan rightly pointed out, this is getting back the investor capital. We are not targeting the end use capital. It is that surplus capital in the range of 1 lakh to 5 lakh, which is being generated and can be poured at a larger end.
I would just add one point, sir, is so last year India invested in financial assets to the tune of close to $300 billion, right? That is the kind of money which has gone in. Now, everyone is slowly understanding that residential real estate is no longer as attractive for investments because people have bought 2, 3, 4, 5, 7 homes, I don't know what not, right? So that money is the one which is moving towards stock market, moving towards mutual funds, moving towards other things. We feel what we're doing with fractional ownership and what REITs are trying to do is just getting that money back into the real estate sector. It was going away, right? So we are battling for the real estate sector to get the money back into the sector.
And on this note, on this point, I will ask Ram, who has been working in this space very, very silently. He's using technology. He understands residential real estate. And I would now ask Ram, what is your take on what is happening? You are already, as the founder, CEO of Integro Asset Management Company, focusing on real estate. What is your take on this, new kind of a trend and new kind of a magnet where we're trying to attract the investors' money? Or Sudarshan is saying what Harshul is saying, we were losing this money to the mutual fund. Mutual fund से ही है करके एक ही कैंपेन ने बहुत सारा जो पैसा है रियल एस्टेट से बाहर हमारा ले लिया था। पेंडेमिक के पहले भी हम बात करते थे क्लाइंट से, तो सब बोलते थे हमको ताला चाबी वाला फ्लैट दो, हमें कोई इन्वेस्टमेंट नहीं करना है। So Ram, where was the gap which you realized at Integro?
Okay, so I think I would not take this debate to whether residential is good or commercial is good. I think overall real estate is good, and India and Indians have always liked real estate as an asset class where people find it comfort, because it's not just the word real, it is actually real. Right? But my point is a little different, and both Sudarshan and Harshul talked about one word: trust. I think when we think about productizing real estate as a financial instrument, trust kind of becomes the center stage of the discussion. And the growth of this trust format is going to happen, which will be driven by basically three things. Number one, technology, where entrepreneurs like Sudarshan are really doing heavy pulling, and a lot is coming up there. The second is the regulation, that how the regulation has to basically help this trust, right? And the third part is that data. So I think the entrepreneurs today are already addressing the data and the technology part. Where we need to see a lot of catch up is on the regulation, and I'm sure regulators have taken a note. And the reason that the regulators have to take that note is today, for a $3.5 trillion economy of India, we have $1.3 trillion sitting in term deposits and saving bank accounts. Now, that's a huge amount of money, right? And if that money has to get freed up to something, a class of investment where the entire democracy looks at as the first stop or the first step, that when you earn money and when you save money, it will really create a wonderful ecosystem. And I think we are at that tip where the catch-up will happen. I think technology is already at the lead. Data, there is a huge amount of data already in place, and now comes the time of regulation to catch up. And not just REITs. I think REITs, fractional, co-ownership, and possibly a lot of new classes of even supply of real estate classes like co-living, managed living, senior living, student housing. There is a lot which will be on the offering as and when we productize the real estates, the real assets to the financial products.
So can we just term this right now as the alternative asset class? Is that what we are now saying? When what you are saying, Ram, is there is going to be a lot of technology which is going to be driving it. That is what's happening at all the tech-enabled platforms like we have Strata now, focusing on technology. There's going to be blockchain, which is now the new word of the discussion in the real estate circle. So we are now talking about various asset classes being created, which are getting emerging, which are going to be coming on the platform, where a so-called retail investor will be having access to that kind of investment opportunity. So that's what we all of us are on the same page, right?
Absolutely.
Harshul, you're a developer, right? And you are a second generation developer. You've been building projects across the length and breadth of Mumbai. From a developer point of view, where do you feel is going to be this new trend? Earlier I remember when we were dealing, we used to come there, used to tell us, Sangeet bhai, ye hamara project hai, tame 50% api do, baki, after construction, possession pa dei do, and we do that, right? That's been going on for the last 15, 20 years. Obviously, that is what happened when the so-called investors moved out of the investing into real estate, because we were not getting that kind of returns. And we lost all of these investors to the stock market, to mutual fund. which we are all bringing them back. From a developer perspective, where do you see this change now?
So thanks, Sangeet, for that question. And I think I'll just carry forward the thought from what Ram Yadav was saying, and what you rightly coined as alternative real estate. So I'll give you an example. There is a project in a micro market of Bombay called Wadala, which is typically a tough micro market to do sales because the vicinity micro markets are tony, the rates are affordable over there, and here you have a lot of slum pockets. So it's very difficult to attract consumers into this particular micro market, irrespective of the price point, really. Which is where there was a combination which this residential developer did for his slum scheme, is where he got a co-living partner at the inception stage itself. And this co-living partner, committed a yield of 6%, which is, almost double, and in some cases triple of what a residential asset yields really. Now, with this combination of a residential real estate project with an alternative asset class of co-living, offering to an investor that, someone who still believes in residential, because you have a lot of investors who typically do like these residential flats, but at the same time are not very happy with the rents that come. So if they are getting 2 or 3 times the rent that they are getting, they were comfortable. And you would be surprised, the knocked off the building is yet to come up. While the construction is on, the entire inventory is knocked off. So this purely, and I'm talking of a location which is not even remotely close to Pune. So what I'm trying to drive as a point is, this is the kind of demand which is there, and this was such a novel, a case study to my mind, where if we are creating these hybrid models as a developer in order to monetize the real estate in a very effective way, also providing a solution which today's end user or investor is looking at. And even if his preferred asset class is residential, for example, how we can marry it with a higher yielding asset class. But here I will also give you a caveat. So while something what a Sudarshan does or something what a REIT is, it's a ready product which is already leased out. So you don't need to have any stress with regards to due diligence, completion, to have any stress about the income coming from the next day. So that is already in place. But with things like this, it's a promise. It's a leap of faith. That the project will complete. The co-living player will get the students or whosoever they're targeting. The rents will come, and eventually you will get that particular return. So while it's a good start, which has already got a proof of concept in terms of subscription, but really I would say it's a test of time. If in these next 3-4 years this gets delivered, investors make their returns, and everything goes well, it will give birth to a new ecosystem. So even residential pockets where developers today are struggling due to viability issues will look to marry in such concepts. You have student housing, you have co-living, you have elderly living, all these kind of options can have a hybrid format, and which is serviced apartments or rental housing. Rental housing in India itself is extremely low, but if you see globally, it's a big trend. And service apartment REITs or service apartment fractional ownership could only be an offset if this arrangement works out. So to my mind, it's extremely dynamic. It's extremely interesting. It's like, how we directly leap to 4G and 5G. We never went through 1G, 2G, 3G. That whole cycle, we had a direct leap because abroad was already at 3G, 4G. So by the time we had the technology adoption, we took a faster leap to 5G, which is experienced today. So something similar in the universe of REITs and fractional ownership, where I see that we will be moving to these hybrid formats very quick. Because the way entrepreneurial spirit of the developers and the operators over here is, I don't see it a stagnant, slow mover, but yes, we'll see a lot of dynamic formats coming in.
Fantastic. So we can understand there's a change now. The stakeholders are also adapting to the technology. Sudarshan, Tata has been in this one of the first movers we had. We have, and you are having a good amount of share of the market. What are the challenges you face, or you have seen this industry grow? I mean, if I would ask anybody, you are the best person to ask. So, where do you find? I don't want to. I mean, from an investor point of view, right? How evolved has the developer been? How evolved is the landlord been? Because ultimately, the supply is going to be coming from a developer like Harshul or from a particular asset which has been rented out, which is yielding the return, right? So where do you see the change happening now?
So let's give you a perspective from an investor standpoint only, right? So these investors today get to see the property only on their laptop or their phone, right? So there are certain times where as real estate has a real estate value also to it, but unfortunately investors look at the paper value of the investment and the returns they're making rather than the potential upside. So that is one education in my view which is required for investors to see beyond just the rental returns. There is a possible FSI potential for higher development in future, 100 other things which can come forward. Which is also something we've been trying to educate people as such. Also for developers, which as a concern we've seen, which is why investors have issues, is because they still get a lot of investors who are ready to offer at 6-7% and they're ready to buy assets. We are very clear, we are not investing if our investors are not making better returns than FD, worse come worse. Right? So FD is at 7-8%, I need to hit 8-9%. Otherwise, I'm not buying into a particular property as such, because we strongly feel this is hard-earned money of people and they should get the right value of the asset, and that's what my job is. And this has helped us over a period of time. Like for instance, our scale in the last 3 years of us being in existence, first year 80 crore business, second year we did 450, and now we are at 1400 crores in terms of business, right? So now at scale, I am able to hit for those assets where I can get a far significant value. Like at least the last 2-3 assets which we had acquired at 8-9% lower than the guideline value, forget the market value of the asset, is because now I'm a large wholesale buyer, which means I can command a large discount on the purchase price of my property as well, which is a great benefit for our investors in general, right? So this comes with scale. Likewise, my asset management is also getting stronger. So if a tenant leaves, I have the pull to find another tenant in the market. Again, with thanks to all the partners we have who work with us on a regular basis, it makes this a complete ecosystem where it's a win-win situation for all stakeholders involved. Even for a developer to see a long-term partner, we can be your India's Blackstone. We can back you for all your projects, because an investor, once let's say Harshul, we back Harshul, they're very happy with Harshul's development and the returns they're able to generate. They will continuously keep backing for every other property Harshul is bringing out in the market. For Harshul, he knows that there's always a huge chunk of investors who are already ready to, back him for every project. So we only request developers sometimes that leave some value for the investor on the table. Don't suck out the entire blood out of the asset where there's no value left for the investors to make money. Investors will respect you back and keep backing you for every opportunity per se. So if you have the vision to scale and build large portfolio, be the next, DLF, be the next Panchil, be the next Embassy or Prestige, we are there to back you, and our investors are there to back you consistently always.
So that's Sudarshan, what I understand now, it's a win-win situation, right? Harshul is for the developer, also you are.
So Sangeet, this is so beautiful. You have from the banking side, Ram, who gives a full 360-degree perspective from banking, NBFC, AIF platform perspective. You have Sudarshan, who has the complete on-ground, pulse of the investor, who's actually deploying capital and how he thinks. And I can give you some pulse around, what the developers are looking at this entire arrangement. And what Sudarshan said, I couldn't agree more, that, if from the first day you have a financial closure of the project, and which is so very important. And, I'm sure Ram would agree that this is the first thing which even a banker looks at, whether, there is a financial closure to the project or not. And, this entire investor array provides that comfort. And, if that arrangement works at a right format, it is a platform which is created. And I was talking with a couple of developers, a lot of names that Sudarshan took, and some from Bangalore, Kolkata, Chennai market. And there is a clean mindset of having a platform. So that is the way they want to grow vertical. So like here we have SRA, MHADA, they have a vertical which is around platforms, and which is where from day one the idea is to work with these kind of formats which enable you to grow. In Bombay, the only challenge we particularly face is land scarcity. So as compared to a Pune, Hyderabad, Chennai, Bangalore, where land is not so scarce a commodity in general, but Bombay is faced with acute land scarcity. So I would always, make a point to say that Bombay is not something, or Mumbai is not something how rest of India should be looked at from asset class perspective, because usually a lot of alternative asset classes lose their sheen purely because of the huge land cost, and we have a pseudo land cost in the term of BMC premiums, which the government. So our BMC is quite rich. 1 lakh crores is the FD it has. 44,000 crore is the budget it has. Which is more than half of Indian states. So it's the dynamic is different when it comes to Mumbai, but almost 7 out of or at least 6 out of 8 tier 1 cities of Bombay of India is where you can say that these alternate classes and the platform that Sudarshan is referring to can really come into play in a big, and is already in play. In fact, I would go a mile further and say, look at the REITs. So out of 3 REITs, 2 are Blackstone enabled. So the positions that Blackstone has created with Embassy, Blackstone created with K. Raheja Corp, with Panchil, Satwa, so virtually 5 REITs you will see.
And Nexus is already
exactly. So out of 5 REITs, so out of 5 REITs you will see 4 of Blackstone. Exactly. So
you have a retail IPO right now.
Exactly. So that's where the trends are, and there is a huge non-institutional market which Sudarshan represents, and and we also have a huge number of non-institutional developers which are there, which are not really going the listing way as well. So there is that marriage which is possible, and which I thought I would just share my thoughts on.
So very nice. So a lot of this gap is now being being filled thanks to players like you. Ram, now from an asset management company, right, where we are lending, because a lot of things is there where we know to accelerate the growth. We already have a platform where the real estate is getting fractionalized. We already have a platform where there are REITs happening. Where do you see the market, with all your past experience as a developer, as a funder yourself, Edelweiss, where do you see this now opportunity for the investor to invest into an alternative asset fund, investment fund? Because that's the next way forward as we evolve. What is your personal perspective on the alternative investment where an investor has access to investing into an AI?
It's a very difficult question, Sangeet. I won't
That's why
say
I
it's a nice question.
Because nobody in India can answer that question other than the finance minister, and second is Ram Yadav.
Please don't maul me online. Okay, so Sangeet, I get reminded way back in 2001 to 2007 and 8. The front page of most of pink papers like Economic Times, Business Standard would be filled with the headline saying market buoyancy returns because of the FII is buying or FPI is buying. You don't see that trend anymore. I think not that we got a lot of wealth. We just got the confidence back of Indians in Indian market. And that confidence came because of transparency, data, and lot of research and analysis, and lot of entrepreneurs like Sudarshan who brought in a lot of fiduciary kind of accountability in the market for all the players. On the back of that equity market today, we don't talk about somebody selling and the whole market going down. And in the month of January and February, there was a massive, very huge group. There was a problem, but the markets remained where they are, right? I think this is the kind of maturity that we have got on the equity market side. On the real estate development side, I think slowly the mentality of equity-starved nation is fading away. Today, developers understand that there is equity, there is tier 1 capital, there is tier 2 capital, there is debt. And then there are players like Sudarshan who are creating many avenues and tools around the supply side. I think if this triology keeps going the way it is going, and we are able to create a lot of transparency, which is data-led transparency, and create institutions which are fiduciary. So Darshan talked about creating, Blackstone of India. I think that is a very, very comforting statement from the new age entrepreneurs, which you did not hear back earlier, right? And I think that's the kind of attitude which will take the real estate to a very different height. We are a country which in 1997 was 1 lakh crore of saving. We are talking of close to about 150 times of that today as we speak about. What was lacking and what is really coming back is the confidence and the wild spirit, as it is talked in the corridors in Delhi, of the entrepreneurs in India, which will take the real estate to a completely different level. And I think the stage is all set. Next 4 to 5 years, Sudarshan, I'm sure you guys will, and couple of you will make the Blackstone of India reality.
So nice. This is a very, very comforting statement coming from Ram. Sudarshan, where do you see the change from the investor point of view, right? You've been tracking, I'm sure, who are the fractional owners. Where do you see the change? Are you finding the new age, the millennials now wanting to put money, because this is definitely a tech-enabled platform, right? You have to have some technology kind of in connect for having to get into this, invest into this asset class or invest into this platform. What we heard this word being used by Harshul. So where do you see? You have some figures right now. Are you getting the traditional so-called investors back into the system, or you're creating a new class of investors?
So let me give you a demographic of our investors just to give a broader context. So firstly, 40% are women on our platform, which for us is like, wow, this is great. This is financial security of its highest standards for women. It was 15% last year. It's jumped to 40%. I don't know what.
Of what? I'm sorry, I missed it. 40%?
So 40% of our entire AUM is women led investment as such, right? So that is number one. Second is 65% of our investors are people who are CXOs, professionals, IT professionals, and different kinds of people who deploy. So these are those people who have no option but to buy another residential real estate, or were not investing and investing in the financial market, right? So that is the new age, I would say, not the traditional, because they could never own something like this. Only 5% are family offices, which means they are still competition to me because they have larger checks and they are also bidding for the same assets which I'm bidding as such. Just that our speed, our agility, as well as our professionalism, and obviously now our track record, we are outright able to beat them, even though they're ready to pay a little more than what we are, just because any developer still thinks there's a doubt that, okay, will he actually transact as such? But today for us, it's more reputation loss if we don't transact after committing something like that, right? So that is the scale at which we're doing. And that's how the industry grows, right? Like there is a great manufacturer who's manufacturing, underwriting an entire product where investors can take as much comfort and then go about doing the entire thing, obviously doing their whole respect around it. A good 10 to 15% are doctors, are CA professionals, are lawyers on a platform, and the balance is all NRIs who can be anybody, right? For whatever, so we're not able to track what they do. But only about 15, 16% are NRIs. We're very confident that this will become about 30, 40% in the coming year, because sooner or later, In fact, we started working. We just made our first dollar investment on our platform as well, where investors could invest in dollars as well via our platform. Completely automated the entire process for them.
Very interesting.
This again opens a large array of people who want dollar returns back to their country.
And that's good for us, right? You're going to be bringing in dollars to the country, right?
Correct. So that's what we've seen as trends, and we are going to continue seeing as growth in this sector, because for investors, what everyone's speaking about, trust is one parameter, but more than anything else is the whole asset management piece, which is critical. Like one of the CEOs of a very large IT company is an investor. He has close to about 13 residential apartments in Bangalore. He likes Russian.
Wow.
Every week. My Sunday is going around managing my properties, because some tenant leaves, a new tenant comes, work with 4-5 realtors to find new guys, interview them. I'm sure you've been hearing about Bangalore interviewing people before they give their house to them, etc.
Yeah.
So all that stuff is, in true sense, is what, as a CEO, where he makes probably $1 million, $2 million a year, 5-10 crore rupees kamate hain, but unka Sunday goes around collecting 30,000-40,000 rupee rentals from their occupant, right? He like, that's not the business I'm into. So he sold
Great
one of the
insight.
apartments, entire
Wow.
3 crores he gave it to us. He's like, hey, I have 30-40 crores worth of apartments. I'll sell one after the other, because for me, it's about getting better returns, number one. First, second is also the whole hassle of asset management, which is a larger concern. I'm not a tier 1 tenant as Sudarshan, but Strata can be. But in a residential, it's Sudarshan, because Sudarshan keeps making money. He'll buy his own house, he'll walk out of the property, and you need to keep finding new ones. So there's
Very interesting.
in an office or a warehouse, a tenant sticks around for 5-10 years. It's not easy for them to just move out just for some lower rentals across the building, etc.
Yes.
Because an ecosystem.
And we have longer lease terms in all our multiplexes, we have retail, commercial. That takes care of that. So this is very interesting, very quick, because we're going to be running out of time very soon. One question to all three of you, Sudarshan, Ram, and Harshul. We've been talking all the good things. Any caution for the investor? What should an investor look for? Either is investing into a pre-lease asset, is investing into a REIT, investing into a fractional ownership, or investing into an AIF, into a fund. What all three of you could give us?
So two things. Two things, and I'm glad you brought this up. In India, until and unless a scam happens, we don't see a regulation come up. So, we have a very different approach with regards to rules. We first wait that what is the loophole which is being there that's continuously used, and then, one fine day it blows up out of proportion, and then you have a regulation. So we have a very post-incidental approach with regards to these regulations. And that is primarily what worries me also, because any sector, any asset class, any instrument that you look at, it does come with its own fair share of, loopholes which are there. And then they get overused, overexposed, and then one fine day it blows out of proportion, and then, you have a regulation. So I see, that happening and eventually happening. When it will happen is one question, but yes, fortunately, we are in an era post RERA, which I use, as an analogy, as a metaphor to say that it's a new generation which is betting high on governance. And from that perspective, while it's a seesaw, so you have 6-7 good guys trying to do good work. There are 2-3 bad guys who are trying to expose, misuse these loopholes. And I'm sure, but at one point, it will blow up somewhere. I hope it's a small bomb which is there and not a mega tsunami which comes up. But with that, you will see the regulations tighten up further. So that is one perspective. The other day, we were having an interaction with Ajay Mehta, who's the chairman for RERA. And, very interestingly, what he mentioned was RERA also, tries to look out for new trends in real estate. And rental real estate is one where he said a lot of capital movement is there. So which means that if individual layman's capital is moving to rental real estate, you might be surprised that you will suddenly have RERA having some sort of regulations over there, because ultimately RERA is for all real estate stakeholders. So that is one, around the regulations piece. Second, and most important, exit. So this four-lettered word is the simple, most effective word when it looks at from any money which is invested perspective. So whether it's Ram Yadav putting his capital as a bank, or whether it's investors taking a bet on Sudarshan's strata, ultimately everyone wants an exit. So the effectiveness of these instruments will be on how well this exit comes out. So if this exit comes out gracefully with the returns which were promised here and there, keeping the market in thought, is fine. But if the exit doesn't happen, or if there is a struggle with the exit, today it's a very dangerous era. So other day I was seeing on Twitter someone creating memes out of a grade A developer who's doing some fancy project in Mulund, charging a premium. So the entire goodwill which is built over a decade can get lost in 10 minutes, and the world is so viral. So if exit is not happening rightfully the way it is committed, so it's like the Abhimanyu's Chakravyu. So all these investors, all the capital is coming in like Abhimanyu. The party is going right, but the exit needs to be there, and that exit will facilitate a larger re-entry. So if 100 rupees is going out, trust me, 200 will come back into the system.
Very valid point, also.
And that is, so that is really where I feel are my 2 points around what should be kept in mind, or what's a caution orange flag which is up over there.
Very valid point. Thanks, Harshul, for bringing it up. And I will take this ball now from his court to your court, Sudarshan. How are you going to be giving exit to the investors who have come on your platform?
See, so there is one very interesting thing which many of our fathers and grandfathers have told. मैंने property 50,000 में खरीदा था, आज देख 5 crore हो गया, 50 crore हो गया. You know why they keep selling? They keep telling this is because they didn't exit. Right? There is a power of compounding which people don't understand what real estate offers. Right? And when people come with the mindset of exit when you invest on day one, then clearly this is not the asset class you should invest in. Real estate is not a 1 year, 2 year, 5 year product. It is a 10 year product, bare minimum to do it. And the real compounding starts post 10 years in general as such, right? So if you look at a very opportunistic investor as a fund management business is there. Like I said, it's not my job to give an exit. I'm a facilitator. I'm an asset manager. The decision of an exit, when you want to exit, is in the hands of the investor when they want to do it. Our job is to give you advice on what is ground reality. Is it right for you to stay? Even if a tenant leaves, our job is to find another tenant. We don't promise, we don't guarantee, we don't use such words, we don't take any such kind of ownership on our cater as well. Our job, like I said, is an asset manager, and we do that very, very well today. We have close to about 26 assets which we have under our portfolio. And we consistently follow up. There are tenants who don't pay you on time. We follow up. We take care of everything. We take care of property tax payments. Government suddenly raises the property tax. We go back, fight with the government as well to lower it down. All that job is what my job is. And I keep doing that to the best of my capabilities, and will consistently keep doing that, right? But in terms of being caution, I think one very important parameter which people need to do is not everything is as lucrative as you may want to foresee. Which means you need to look at multiple things before you decide to invest. It's first vet the asset manager, who they are, who they're backed by, what is their capability, what is their track record before you come in. Now, I can speak track record. When I started, obviously, I didn't have a track record. So it's not that I'm saying discount that. But having said that, the track record of the promoters who are driving the show, or the team which is there, if not for the track record of the platform, which is also very, very critical for you to keep tracking on a regular basis. Second, which is very, very critical, is about the property itself. Learn to ask the questions. Don't go blindly with whatever the platform is saying. कि वो भी इंसान है, वो भी गलती कर सकते हैं. But that's when there are 100 people who are investing, 100, which means you're talking about 200 eyes who are looking into a particular opportunity and then doing something like that is very, very critical. Like, for instance, we take steps way beyond. We do profiling of our investors. So we know our investors are in which industry, where they are sitting and operating. So when we get a property or a tenant which is of that similar industry or the micro market, we call our investors as shamelessly as possible. Sir, this is the thing. Now, batao, is this a good tenant to back? Is this a how consistent they are with their vendors, what is their track record. We do all sorts of ref check with our banking connects. We do civil checks about the tenants as well before we come
Very
in.
nice.
So stuff
So
like
this-
that we do to understand that there is a lot of data-led investment decision making happening for investors, and it's not a gut call. No, मेरे को लग रहा है कि next Wadala is the scale. This is a story. Absolutely not. A lot of groundwork goes in terms of ground level.
मतलब story नहीं बिकने वाली है, facts बिकने वाली. I can't just make a story and say.
There is a 5% story, whatever said and done, right? 95% can be data-led, 5% still a gut call for whatever is known.
Okay.
Vijayawadi is a growth story.
There's a lot of change. We can see in this last 45-50 minutes of session, we've been talking about it. There's a huge change. For me, it's a learning experience. I've been tracking this for the last 2 or 3 years. One of my best sessions I've had. Ram, your comments on from an investor perspective, what should they look at? Whatever they're going to be investing. And I don't want to discount the traditional real estate also, because Harshul also will be having a traditional real estate component. So this is not they are not doing a debate here, or this is not that we all four together are there's a war which we are doing against the traditional real estate. May that also grow. We want money to be coming into real estate. That's what this agenda is. We want the investors' money to be protected, and we want the investors' interest to be taken care of. Ram, what will be your take on how are the investors? What should they look at, and what are the additional ways from all of us as stakeholders to protect the interests of the investor?
So I'll just pick up 2 words. Sudarshan spoke about grandfather and forefathers, and you talked about traditional real estate. All my life, I have pivoted to a very different regulated environment, born in an era where, parents suggesting or saying that you should choose this particular subject was more like not an advice, but a kind of an order. My only, submission when it comes to risk management, when it comes to exit, and I completely, second the thoughts of Harshul when he says, the game is really on when the exit happens. But even before that, I think there is only one thing which, make this entire industry grow, and not just grow, but also sustainably grow. And that is regulation. If you are not reading the regulation as is, please read and understand the intent of the regulation. If intent of regulation is understood, the chances of creating a bubble, chances of creating an asset class or creating a structure where either investor, principal, or asset manager will suffer in long term, that will get reduced. So my sense to all sort of models is that please understand the intent of regulation. Intent of regulation is to safeguard the investor. To safeguard the investor, you need trust. And for trust, there are regulations. As an investment manager, there are regulations. As a investor's, goodwill, all you need is a sponsor. So you have to check, are you a sponsor? Are you an investment manager? Are you an asset manager? And then try and remain specialized in that fiduciary area. Try and protect it from that perspective. But the word is regulation. Regulation never comes and surprises. Every regulation in this country and across the globe has only been drafted and crafted to safeguard you and to safeguard others. The moment you leave that intent out, then that is where what the current world's creativity is, the creative destruction to the wealth that possibly can happen. So all we have to do is we have to guard it, understand the regulation. Sometimes we may be little delayed, doesn't matter. Go to the regulation, hobnob, talk about it, ask for it, cry for it, but do remain regulated. And I'm sure, Harshul, the kind of growth the real estate is seeing post-RERA is phenomenal. It is the 1993 moment of SEBI, what SEBI did to the markets RERA is doing to the real estate. And that same thing has to happen from SEBI's regulation, whether it is REIT, AIFs, or even the fractional ownership or MSME REITs. Things will happen, and they will certainly come, and regulation catches up. But in real estate, we need one more NASSCOM. And that's where people like Harshul are really playing a great role. I think we have to keep pushing them, make them sleep a little less, get the regulations in place, and then really grow this industry in this country.
Very interesting. Very interesting session we had. One now closing remarks, Harshul. Why I'm asking you this question, because you've been authoring books. So you have, and you are also on the market research panel on PropertyAngel. Do you have any kind of figures for us, or as a closing remark, for our investors to understand how big is the opportunity, how big is the market for the investor to be investing into this new age investment opportunities? Any idea on some figures? All of three of you, I mean, even Ram, Sudarshan, and you can give us some figures. So, I mean, when we end the session, everybody will understand how big the market is, how big is the opportunity, and we did the entire 45-50 minutes. We've spoken about the entire process, how we are doing it, the changes we are doing it. So, can we have some kind of figures so that our friends can get an idea of how big?
I will. Sangeet, I'll give you a very.
And don't give me a figure where I have to fall out of my chair. So give me a figure where I remain in my chair. Because I have a feeling I'm going to fall off.
Every household, and I was having this discussion internally at Credai National, where with the president-elect, that what is the importance of real estate for a average Indian family, for an Indian household. And this was a very important question, because we are for the last 15 years stuck on two numbers. We are stuck on a number that real estate is the second largest employer, agriculture is the largest employer. We
are
just stuck on that perpetually.
That's why I asked this question to you. Let's get some facts and figures now.
We are stuck somehow on the number that real estate contributes 6 to 7% of India's GDP, and 250 ancillary industries depend on real estate. So we are having a very interesting conversation where why are we stuck on this number for last 15 years? Because the fact, and it was a very simple observation which was given, that real estate is the only sector as compared to agriculture where there is 365 days employment. Agriculture actually provides you seasonal employment. So it does not provide you a full employment. So that was one big factor. Second was, of course, we were just looking at figures of Gujarat, that, what is the kind of money which Gujarat has been looking at. 2 lakh crores was the number which came alone from Gujarat. And it's published in Times of India. President-elect of Credai is from Gujarat, Shekhar Bhai of Ganesh Housing. So, I was having this conversation, and we are actually in a process to do a national study of, sort of revalidating these two statements, whether, real estate actually is the largest employer. If you look at man hours in a year, it's not seasonal. We work 365 days. Our laborers work 365 days. And second, is GDP contribution only 6%? I don't think so. I think we contribute far, far larger if you pool all the real estate asset classes together. And, our friends in the banking industry, we are going to reach out to, in terms of substantiating what is the numbers in terms of loans, whether it's project finance, whether it's home loans, which are, and, those numbers will be astronomical. If all the bankers are putting out those numbers, that this is our loan book, this is our home loan book. And if you all pull it up together, you will purely get the supply and demand idea. Because on an average, 30% of the project is financed by financial institutions. And on an average, 70% of the finance comes from home loans. So, this is an exercise that, which we are undertaking to, work out these numbers which we've been talking for 15 years.
Fantastic.
And last point I will leave you out with is a very interesting thought. And when we were observing every average Indian household and their relation with real estate, 70% of their family worth is in some or the other form of real estate. 70%. Look at these numbers, whether it's the house, whether it's their shop, whether it's their office, whether it's the property they own for investment. 70% of average Indian household is in real estate. So this purely substantiates how critical this is, and how favored this is. If that was not the case, everyone would be going on rent, everyone would be putting their money in gold or some or the other form of asset class. But these are mind-boggling stats
Absolutely.
which are there, which we gonna work around really.
So nice, fantastic. So first of all, like to thank Sudarshan for a valuable time, for your wonderful insights, for building strata, and may you continue build, and we have stronger ecosystem. Thank you, Ram, for joining us and giving us your very, very valuable time. And as always, being very, very kind, Harshul, with your knowledge, which you are sharing with all of us through all your books, through your webinars, and may we have one session live. We all, hopefully, I will be able to moderate all three of you live on a very larger platform. Hopefully, it could be a global summit where we take India on a global platform. Would love to thank everybody. Special thanks to PropertyAngel, to Sapna for building this amazing platform. This is a 3-day virtual event we are having, which is one of the rarest events, but the first kind events where we have the largest developers taking part, exhibiting from this event. Right from Brigade to Prestige to Shriram Properties. We have the exhibitions where online you will be getting a complete view, a 3D view of the projects. So once again, thank you all of you for attending, and all my dear friends who are wanting to invest. And if you have any question for Harshul, for Sudarshan, for Ram, please you can put that in the comment section. Do write to us, to Sapna. We would be more than happy to answer your questions. As you can see, this session, we've been talking about you. You are the investor. It is your money that we want to put it back into real estate. It is your money that we want to safeguard. We are all working for you and for your investments. Rest assuring all of you, a fantastic and enriching session for my 3 learned panelists. And again, thank all of you. And again, reminding all our attendees, all our delegates who are watching us, to please send us your queries, your comments, and we will be more than happy to take it offline. Thank you once again, Sudarshan, for all the wonderful insight. Thank you very much, Ram, and Harshul, a friend. Thank you very much. And Harshul, how many books do you have, which can we, in case we have a requirement, friends, to ask for your books, or you have about 16, 17 books?
So I have a very nice announcement to make. Next week, we are launching the 18th book, which is on a very pressing issue called as NCLT and IBC for real estate sector. So after RERA, one regulation which really changed the game for stalled projects, for bankers, and for developers has been NCLT and IBC. So, we had the older laws of DRT, going to courts, doing cases, extremely ineffective. But what RERA did for home buyers, NCLT is doing for bankers, and a lot of bad book is getting cleaned up. It's a Ganga Snan for everyone right at Kolaba. And, that is, and it's a book focused only on real estate sector. So NCLT IBC for real estate sector, 150 pages of content, which is focused on real estate. We're launching it next week. And that is going to be the 18th in the real estate series. And, hopefully a few more this year.
May you keep writing, because what Sudarshan said, what Ram has said, that is where the knowledge gap, which is there, which this is the whole idea of this 3-day conversation talks, which we are having, deliberation we are having, is to bridge this knowledge gap, which is where the Indian real estate is evolving. And this is where we have such young players, new emerging, landscape players who are joining this evolving real estate a $1 trillion economy is knocking at the door. And I would again thank all of you and all our viewers. And please do send us your questions, your queries. I will personally take it to Ram, to Sudarshan, and to Harshul. So once again,
and to all three of you all, I'm going to send you all the first fresh print author copies of the NCLT book, and I'll wait for your views. So
thank you,
to
Dr.
the three of you all, in the next 10 days.
You're so inspiring. And after that, we also tell me, can I become a Dr. Sangeet Kumar or not?
100%.
Hello. Thank you, Sudarshan. I'm on a very serious note. Once again, thank you all.
Bye, Sudarshan. Bye, Ram. And I hope to see you guys in person
Having
soon.
a new wealth creation here, friends. And here you have on the screen Sudarshan, Ram, and Harshul, who are driving the new age wealth creation. Thank you very much. God bless. Take care.